everyone. Welcome back to the Canadian SME Small Business Podcast. I'm your host, Maheen, and today we are discussing the intricacies of the cost of living, particularly how it affects small businesses and their employees internationally. We'll unpack Mercer's latest findings and see how businesses can navigate the fluctuating landscapes of global mobility and employee compensation. I'm thrilled to welcome Cordova, who leads Mercer's mobility advisory business for North America. Wins brings over 25 years of experience in international HR operations, helping some of the world's leading programs navigate complex compensation environments. Join us as we delve into his extensive expertise and learn how companies can better support their teams amidst the challenges of global mobility. Hello, Vince, and welcome to the show. How are you today?
I'm doing well today. How you doing, Maheen?
Very well, thank you. And I mean, it's fantastic to have you with us, given your deep expertise in global mobility and HR strategy. I mean, your insights would be particularly valuable as businesses and employees face, significant shifts in cost of living in an international work environment. So we're quite eager to be here with you and to hear your thoughts and guidance on these pressing matters. Now, to begin things with, or to kick things started, let's begin by addressing a pressing issue many of our listeners, I'm pretty sure, are facing, which is rising inflation and its impact on pay. Vince, how can companies help employees cope with inflation and currency changes affecting their pay and savings?
Well, I think there's a couple different ways to look at employees, right? So in a domestic context, in domestic context, typically it's the job market or the cost of labor that drives salary increases. What some organizations have done when they've looked at the rising inflation, which thankfully has subsided in the past year for most locations in America, they've said maybe it's time to do sort of a special adjustment to account for inflation, or in thinking about merit increases, maybe adding an inflationary component. And I think that's what some organizations have tried to do when they've looked at their employees, knowing that their wages aren't going as far as they once did to purchase the goods and services that they need to kind of, they need on a daily basis. So that's been one strategy. I think the other piece is it is somewhat reflected in salary increase data as well, that there have been high pay increase levels for the last couple of years, and I think part of that has been influenced by inflation. But it's one of those things. If you look at the way inflation has moved over the last decade, and it hasn't been very high until recently, salary increases have outpaced that generally. Um, the last couple of years, it's been sort of misaligned, and I think it's coming back into alignment, in that you'll see sort of inflation, hopefully, in that kind of 2 to 3% range going forward, and you'll see salary increases maybe going a bit higher, assuming a recession doesn't kick in, and labor, particularly in certain sectors, remains hard to find and hard to retain.
Well, that's invaluable advice for businesses that are really looking to maintain fairness and stability in compensation. And on that note, let's really take a moment to reflect here because, for all of you that are tuning in, managing inflation isn't just about adjusting numbers on a spreadsheet. It's really about ensuring that your team can sustain their livelihoods amidst, fluctuating economic conditions. So, listeners, just think about questions like how is your business really adapting its compensation strategies to cope with these changes? And perhaps it's really time to think about innovative ways to support your employees that go beyond the paycheck. Now, Vince, despite poor quality of life, some cities still impose high costs for international workers. Why do these discrepancies exist, and how can companies manage these challenges when assigning international workers?
Well, I think if you look at the global landscape and you say, okay, part of what Mercer does is, and we release this ranking that shows over 200 cities, and you'll see some cities that are relatively high cost, um, in places that people wouldn't necessarily want to go to. So think about some locations in Africa. Um, you know, there are um, there are situations that cause goods and services to be expensive in those locations, due in part to logistical challenges. Many things are imported. Um, Combine those two, and you can kind of see to get food that's considered sort of acceptable for a typical international consumer, it's going to have to travel far, go through a logistical chain, and then, it's going to have to be in only a handful of markets in that location. Those are some of the factors that drive increased costs in places. I think like this year we had Chad was just outside the top 20, right? Not really a wealthy country, but the cost of expatriate quality goods and services are very high there. So ways organizations help manage that are really twofold. One is they'll provide a cost of living adjustment to help account for the fact that goods and services are more expensive. Another dynamic is, usually the quality of living in those locations present challenges. So on top of a cost of living adjustment, an organization may also provide something called a quality of living adjustment, which is typically a percentage of base pay up to a certain amount to help compensate the individual for challenging conditions in that market. So it's kind of a two-factor piece. One is we recognize that goods and services are more due to a variety of factors that are really beyond the employee's control. So we'll help equalize their purchasing power. And then two, recognizing that the quality of living is low comes with its own separate issues. And we can help organizations develop an adjustment factor to account for for those difficulties in quality of living.
Right. Now, understanding these dynamics is key to managing global teams effectively. And on that note, Vince, what can be done to make these assignments more appealing despite the high costs?
Well, as I said, one piece of it is economic equalization, right? Where someone's spending more on goods and services, helping address those gaps. Another thing is employee experience. So you can only throw so much cash at someone but it's not really going to impact sort of their impression of the location they're in and their experience with their employer in that location. So when we think about employee experience, relocation is hard. So think about the moments that matter in an employee's relocation to a new location, right? Make sure that you're nailing those moments that matter with high quality support, clear communications, and you've looked at the whole process and you've kind of moved the employee through that process, being fully informed of what to expect. The other piece about job related moves is oftentimes the career experience is really important. So if someone's moving with a certain set of expectations, that this move's going to lead to a promotion, give them a different quality of work life balance or something like that. Make sure that there's some alignment between the company that's moving the individual and what the individual expects from this assignment. Where there is a misalignment, close that gap with communication, because what we find is when we survey individuals who have relocated for jobs, dollars really aren't necessarily the biggest piece of it in satisfaction. It's did the experience was the experience worthwhile from a career and a personal perspective? And I think those are the things that are really important, um, outside of cost.
Mhm. Housing costs are a significant part of, the cost of living calculations. What trends have you observed in the cost of housing, across major cities, and how should companies address these changes?
Mm. Well, I think there's two levels of housing cost. There's one as a renter, and then there's one as a homeowner. And indeed, what's happened is that buying into a lot of housing markets has really become quite challenging. One of the big issues with the pandemic was in the US and Canada, money was relatively cheap from a loan perspective, and the housing market started escalating.
Mhm.
Now that there's been tightening on the money supply taking out a mortgage costs more, in many markets, those housing costs haven't come down. So housing is actually much less affordable from a home ownership perspective than it's ever been. And that's created a lot of pressure in the rental market. Not only are rents high, and we've seen more increase over the last year or so in rents than we have in home purchase prices, um, but the availability is very low. In a lot of locations in North America, there is not a great stock of rental housing, and because money is harder to come by from a loan perspective, it's hard to build new property. And even when you think about building new units like new apartments or new affordable housing, it takes a very long time to come online.
Yes.
So that's kind of the challenge I think that individuals are facing. Kind of relating that to individuals who are relocating, what we're seeing organizations do is having to provide more support in the form of like temporary housing or rent support, because individuals are moving into communities where it's probably going to take a lot longer to find a place if they're looking to buy. And then if they're looking to rent, they may not have that sort of ability of someone who's local to the market to say, I can stay in my apartment on a month to month basis and then look for the place, wait maybe 12 to 18 months to find the place I really want to rent next. Um, so that's kind of how we're seeing employers kind of help manage this issue, thinking about, if I'm bringing someone into a market, maybe giving them 1, 2, or 3 months in temp living, giving them some support in that. And then when they look to purchase, seeing if there's either company type programs or other solutions that can help get them some good financial information and how to secure a good mortgage rate, and also balance the different factors that go into making a decision to buy a home. So things like financial wellness tools for employees are really important when you think about helping them manage the cost of living. So that they can understand the concept of budgeting and saving a little bit better, and that'll help them be a lot more successful because when you think about employees, it's really their disposable income after they've paid for taxes, goods and services, and housing that's their buffer.
Hmm.
And thinking about how they can best use that buffer, um, in an inflationary environment is, I think, pretty important. Um,
No, these insights really would help companies plan better for their employees' needs. Now let's kind of tie this to the Mercer's cost of living data because Mercer's cost of living data ranking is a crucial tool for many businesses. How can businesses effectively use this data to make informed decisions about global mobility and international assignments?
well, I think our cost of living ranking, it features a little over 225 locations. And what it does is it says for international employees who are looking to purchase a typical market basket of goods and services and rent, a comfortable apartment. This is what this market basket of goods and services housing will cost relative to New York, right? New York, where I'm from, comes in as the seventh highest place in the world. At the top of the list is Hong Kong. At the bottom of the list is Abuja in Nigeria. So what that means is if an organization is looking to deploy resources around the world, the list will give them some insight into if I'm looking to put a Canadian or a US person in this market and it's a higher cost market than the US or Canada, I'm probably going to have to do something to supplement the salary I pay them, right? Because we're going to have to address these higher costs of goods and services and rents in those markets. Um, Similarly, if I'm looking to maybe sort of think about opening a facility or a strategy where I'm looking to maybe concentrate talent in a certain city, I could think about are there cities in my network or my global network that I think, we have a pretty good talent supply and they're close to other markets that we do business with where we know that there's good talent, and if they're lower cost, the list could tell you that maybe it won't be that difficult to incent people to move into this location because we can pay them a competitive local salary, and from the locations we may be sourcing them from, they may see an increase in their disposable income. And then sort of aligned to that is we also publish around November of this year a quality of living ranking. So if it's a relatively high quality of living location with low costs, that could be a real winner for an organization looking to kind of plant a stake in the ground and say we want to build capacity in this location. Because it should be relatively easy to bring talent in because it's got some good selling points.
Right. And leveraging data effectively is crucial for, strategic planning and global mobility. But what are some pitfalls or common pitfalls companies should avoid when using this data, Vince?
One is it doesn't incorporate taxes, right? So we're not looking at the impact of income tax on cost of living. And that is a fairly critical element, right? Because if you look at just the difference between New York and Toronto, I think New York is 7, Toronto is around 90. Um, so, yeah, goods and services are a lot more expensive in New York than Toronto, and I do make the trip quite a bit. So I do know going out to dinner in Toronto is about 25% less than in New York City.
Mhm.
But salaries are higher in the US. Taxes are generally lower in the US. So part of the reason things are higher in the US is we have more disposable income in the US to spend on goods and services.
Right.
So I think that's another trap to think about when you say, okay, well, I look at this list, I see Hong Kong, Singapore, Zurich, Hong Kong, Singapore, Switzerland and the United States are our high cost of living. The reaction shouldn't be, well, boy, I better give my people in those countries a pay increase because the pay is actually adjusted to sort of the cost of living in those markets, right? That they're generally high compensation markets. And even relative to the US, Hong Kong, Singapore, and Switzerland have much lower tax rates. So part of the reason is there's just more disposable income in those countries to support higher costs of goods and services, and to some extent higher cost of rent and home purchases.
Mm. And on that note, I really want to take a quick pause to really connect with all our listeners because we just discussed something so crucial, which is data utilization. I mean, listeners, we've heard about the importance of using tools like Mercer's cost of living rankings to make, informed decisions about global mobility. But for all of you that are listening, how often do you leverage such data in your strategic planning? And are you ensuring that the data you use is up to date and relevant to your specific needs? All these questions may help you, as you know, it's a key part of staying competitive and fair in today's global marketplace. Now, with cities like Vancouver, Montreal, Ottawa, and Calgary, which are seeing jumps in the cost of living ranking, companies need to rethink their approaches. How should multinational employers adjust their compensation strategies for employees in these cities?
Well, I think the interesting thing is if we look at the reason most locations in Canada jumped, but Toronto actually came back a few notches, had a lot to do with the rental housing market. That Toronto had baked in a lot of significant rental increases in the early part of the pandemic, and they've just leveled out over the past year. Whereas, Vancouver is a hard real estate market. Calgary and Montreal showed some increases at a greater level than Toronto, and that's really what moved them up in the rankings relative to their position last year. So if we think about sort of what this data tells us is that it is more expensive to relocate employees into these markets, but a primary factor is going to be the rental cost. So if you are looking to move talent into those markets, be cognizant that these employees may be experiencing some sort of higher cost in what they spend for housing than they're traditionally used to, and they may not be able to buffer it like a local employee who is familiar with the housing market. As I mentioned earlier, this is where maybe some sort of relocation support that transitions away over time may be really helpful for an organization looking to bring people into a market. So perhaps say, as part of the relocation package, maybe we'll give you a rental subsidy for a year until you figure out what community is best for you to live in from a quality of living, affordability, and commute perspective. But we know that initial arrival in this city, you're not going to be able to make really good choices because you're new to the city and there's not a lot of availability, and much of the things you're going to be looking at because you only have a short term to find a place is going to be pretty expensive. So I think that's one way organizations can kind of use the data to say if we are moving people into what's for them a higher cost location, the goal isn't we're going to permanently raise their salary above what the local market says it should be, but maybe
Mhm.
think about providing some transition support that has very clear parameters around how long they get the support for and when it's going to go away. So they have a fair time to sort of understand that this is only a temporary situation and it's going to help us make right become a better economic consumer of housing and goods and services in this market. But
Right.
it's only temporary.
No, tailoring compensation strategies to local conditions is essential for attracting and retaining talent. Now, Vince, before we conclude, could you offer one final piece of advice for small business leaders who are dealing with the complexities of international market conditions?
Yeah, I would probably say for a small business, proceed cautiously and get good information. Because as a small business, you can less sort of afford to make mistakes when you go into certain markets. And while markets may appear very similar from say of a cost of living or a quality of living perspective, you have to think about what you're looking to achieve in that market from a business objective perspective and go a little bit deeper to say, what's the regulatory environment? How easy is it going to be to get individuals to get into that market from an immigration perspective, but also stay in that market if they're really contributing and doing well. And then as we look to maybe grow that market, can we do it with local talent, or are we going to need to bring in talent from other places to grow that market?
Mhm.
And kind of thinking about how all that fits together in a way that doesn't bust the budget for a small business, that you're getting a pretty significant return on investment. And, I think for the small business, the real challenge is, as I said, this concept of return on investment. You want to get the biggest return on your investment as possible. And in order to do that, you really should kind of understand things like cost of living, quality of living, but also, workforce, ease of doing business in that location, and sustainability and growth opportunities. So that would be my advice. Kind of proceed cautiously, collect information, and then look for the location that can give you a stable and high quality return on your investment.
No, thank you so much, Vince, for today's enlightening conversation. I mean, your insights into the cost of living and the global mobility challenges, they're quite invaluable as businesses around the world navigate these complex issues. So again, thank you so much for your time for being with us here.
And you're very welcome, and you have a great rest of your day.
And listeners, that was the end of our conversation with our guest, Vince Cordova, to whom we are very grateful. And today we've discussed, practical strategies for coping with inflation, managing high living costs in various cities, and making informed decisions using Mercer's critical data. We are very grateful for our guests as well as to our partners, to whom we like to extend our gratitude. Our exclusive banking partner, RBC, shipping partner, UPS, exclusive accounting software partner, Zero, email partner, Constant Contact, and hospitality partner, IAG Business Edge. For more insights and to connect with like-minded professionals, please remember to subscribe to the Canadian SME Small Business Magazine at canadiansme.ca. Please stay informed, stay proactive, and tune in next time for more expert discussions on the Canadian SME Small Business Podcast. Thank you.